I think the leading story's got to be the strength of recovery in the regional office markets. The top 5 or so regional cities seeing a very strong pickup in leasing activity, about 30% last year. Vacancy rates are low and the development pipeline is very limited, about 0.8% of stock. So real opportunities for speculative development in the regional cities. It's definitely starting to improve. The last 2 years has been a real story about London and the rest, with London powering ahead. But the temperature's picking up in the regions, investors much more interested in investing outside London this year. They're looking at capturing the recovery, at the beginning of the leasing recovery in the regional cities. The yield gap's also looking very attractive. So I think definitely the temperature's picking up in the regions. London's still going to remain popular, but I think the majority of our clients are going to be looking at interesting opportunities outside London. It's primarily from the UK institutions and propcos. They probably account for 75% of the investment activity outside London at the moment. But we are starting to see an increase in non-domestic investor interest in the markets outside London. While they dominate London, 70 to 80% of purchases last year in London were by non-domestic players. About a quarter of investment purchases outside London were from non-domestic players. And these coming from all over the world, Asia Pac and mainland Europe, all starting to realise that there may be some opportunities for growth outside London, and also in some cases feeling that they've been priced out of London. I think we're certainly seeing a lot more money flowing into the big property investors, the retail funds and the life funds. A lot of money's coming in there, they've got to spend the capital. We're also still seeing an enormous amount of non-domestic investor interest in the UK generally. So we think the volume of investment in the UK will be sustained. And again, I think because of the strength of the London market, a lot more of that money will flow outside London. I also think we're going to see a lot more development activity outside London as developers react to the fact that development activity, is 50% below normal levels across the UK. So I think we're going to see a lot more developers looking to the regional cities, to some sub-regional markets, and that will sustain a lot of investment activity going over the next 2 to 3 years.